Happy Monday, guys. It's your boy Stas here. Welcome back to another video. Got the double espresso on deck. Cheers, by the way. I appreciate you all for tuning in as we have a big week coming up for stocks. And I mean a big freaking week, guys. CPI is coming out in a couple days. Earnings season is still in full effect, and we have to break down 5 companies I'm watching, break down the markets, the charts. You guys know the drill, but first, hit that like button. Feel free to subscribe. Join the email stock newsletter, the Patreon if you want to keep up with my portfolio. All those links are down below, and by the way, the newsletter is free. Get in there, guys, and now let's dive into the video. So right now, what time is it, by the way? It's about 10:45 a.m. when I'm making this video. You're probably watching it right after. I'm going to upload it right away. And stocks are looking, not great. Not bad either. And here I have Viking Therapeutics pulled up, which I've been looking deeper into. As you guys know, I bought Novo Nordisk a couple days ago. Now I'm looking at Viking Therapeutics too. I'm not in this one, but maybe I'll end up buying this as well. We shall see. The stock's doing very well. VKTX is the ticker. But anyway, S&P 500 right now is pretty much at break even. Slightly down, actually, about 17 cents here on SPY. And it's pretty clear right now that we're struggling to break out of about 640, right? $640 on SPY. That was the high about a week ago, 2, even almost 3 weeks ago, right? And now we're above these moving averages, heading towards that point, but we're struggling to break out, right? And that's kind of the spot for this week on SPY that I'm watching out for, about $640. If we're able to get out of there, guys, hey, full breakout could be coming, but it's clear that we're seeing some resistance there as earnings continue to come out here. So let me pull up QQQ, which is actually up, and this is very close to all-time highs, and I mean very close, closer than SPY is. This is up around 50 cents, not a big deal. I mean, it's not up a lot, but it's about, less than $2 away now from all-time highs, which if we're able to break out of that 577, which we hit that about less than 2 weeks ago, this could be breaking out even further from that point, right? QQQ. So I like the way things are setting up. We're slow start to the week, but we're right there. We're right there for a full breakout. It's only a matter of time, and it's going to take probably, till Wednesday if we even do get a breakout here. So let me show you or no, it's not Wednesday. Excuse me, guys. It's Tuesday. Even better. Tuesday, tomorrow. I don't know why I said Wednesday. So let me pull this up so we can see what to expect for CPI, right, which is huge. The whole market is going to be riding on this, guys, good or bad, right? So let me pull this up right here. By the way, run those likes up if you haven't done so already. I appreciate you all for tuning in. So we can see right here, if I zoom in a little bit, tomorrow, 8:30 a.m., we're getting the CPI data, 8:30 a.m. East Coast time, that is, we're getting the CPI data. So right now, core CPI, which excludes food and energy, that is projected to come in at 0.3%, right? Yeah, that's the forecast. And last month, last go around, it was at 0.2%. So yeah, we are coming in hotter than last month on this core CPI reading. Now, if it comes in, let's say for example, at 0.2%, same as last month, under the forecast of 0.3%, that would be huge. Stocks would most likely run. Even honestly, if it came in line with expectations, I feel like stocks could run. Now, if it's hotter than expectations, obviously that wouldn't be good for stocks in the short term. But core, that's what we're looking at, 0.3%. And the headline, the overall CPI, if you will, on the monthly number, by the way, that core CPI number we mentioned, that's the monthly number, right? So for the headline monthly number, we're looking at 0.2%. So it's actually coming down. The forecast is 0.2% for the overall CPI. And last go around, last month, previously, it was 0.3%. So I'm actually pretty hyped up about that. Now, if it comes in, higher than that, again, the market might not like that. But we can see here, again, that's the monthly number. The yearly number, though, is going up. We can see it's 2.8%. That's the forecast for core, not for core CPI, for the overall CPI. 2.8%, right? Last month it was 2.7. So CPI core and the overall headline, both of those metrics are expected to speed up, or heat up rather. Core on a monthly basis and the CPI on a year over year, the headline number, right? So take that for what you will, man. CPI or inflation is projected to heat up, and now with the big beautiful bill, that getting passed, what, $5 trillion? Yeah, more inflation could be down the pipeline, which is what Powell is fighting against. And listen, I've been a huge advocate for Jerome Powell, right? I mean, the guy is doing a great job he did a great job of bringing inflation down. Now he's doing a good job of keeping it down, or continuing to bring it down. And he's got pressures from Trump to cut rates, pressures here, there, and I'm glad he has not cut rates yet. We're probably gonna get a rate cut. I think we're supposed to get 2 by the end of this year. But man, if Powell just bent the knee to Trump, we would have had way more rate cuts probably so far. And you guys know they're supposed to act independently from each other, but let's say he bent the knee, whatever, blah, blah, blah. Inflation would be worse. So I think Powell has done a great job, in my opinion. I could be an idiot. What do you guys think? Let me know in the comments. But yeah, I just don't get the hate for Powell. I think he's done a great job. Could he have done better? Maybe, but we can't be perfect, right? He's done as great of a job in the position he's in. And I think the head of the Federal Reserve, I've said this before many times throughout the history of this channel, that is like the worst job. Well, maybe not the worst job, but there's so much pressure there. It's like insane. Forget about it. But yeah, that is what to expect kind of for tomorrow. Now, let me pull up these earnings. We have 5, way more than just 5, but I want to cover 5 in this video. 5 companies that are reporting this week that I'm watching very closely. So number 1 is Circle Internet Group. You guys know this one. CRCL is the ticker. Circle Internet Group is actually down like 40%. The crazy thing is from the highs here, but it's still up massively from IPO. If you guys didn't know, this company just IPO'd not too long ago. It went from $65. I think the IPO price was much lower than that. Wasn't it like $35? I forget exactly, but it went from $65 here on Thinkorswim is what we're seeing, all the way to $300 a share, guys. That is insane. That was a almost 400% move in like a week, 10 days, 2 weeks. I mean, come on. And since that point, rightfully so, stock has slowed down. Profit taking has occurred. And now we're heading into earnings tomorrow, right? Yeah, tomorrow in the morning, Circle Internet Group. So EPS, the estimate is 34 cents for this company for this quarter on revenue of $644.72 million, right? So Circle bringing in some revenue, guys. They're bringing in some revenue, but there's a decent chance the company is, I don't want to say for sure overvalued because I haven't dove all the way into it, but from brief metrics I've seen, it's like maybe it's a bit frothy. We'll see based on how earnings go, how the market reacts. But that Circle Internet Group, CRCL, they're tomorrow morning. Stock's been downtrending, but who knows? If they provide stellar guidance, this stock could easily go back over $200, guys. Easily. Keep that in mind. It's that kind of stock. It's a high volatility, big mover in either direction. So that's CRCL. OKLO is another one, which I think their earnings are actually today, guys, later in the day. So I'm going to get this video up so you can see this. But OKLO, today after the bell, This stock's down $12 a share from the highs. We hit 85 bucks, what, about a week, 2 weeks ago. Now we're at $73. Stock's down about 12, 13%, which is nothing. I mean, that's absolutely nothing considering the fact that, this thing's up from $17 a share back in December. I mean, a little 10% pullback. What do you expect, right? It's nothing. But listen, this company does not make revenue. Zero. Zip. Nothing. No revenue for this company, but they are tightening up their losses. The EPS estimate is negative 11 cents for the quarter versus last year's, get ready, loss of $5.17. I bumped the mic. Holy smokes, guys. Terrible loss last year, but it's tightening up. And again, they make zero revenue right now. But we'll see how earnings go, kind of how guidance goes. Whenever I see a stock, not making money on the top line yet, still in the early phases, if you will, the stock's gone up a lot, I'm like, I get a little nervous. I'm not going to lie. So for me, guys, I'm staying away from OKLO right now. Not saying it's bad, not saying it's going to dump, but it's gone up so much. So I'm not trying to chase it. I don't want to FOMO into it, but we'll see how it goes. Maybe they crush earnings and the stock rips back to the 80s again. If you're in the stock, I kind of hope that happens for you. I hope that happens for you. But again, I'm not in OKLO. Maybe I'll buy it one day. I was gonna short it a couple weeks ago. Thank God I didn't. I kind of came to my senses before I did that. I could have made money depending on the timing, but overall, man, when there's something with this momentum, you got to be careful on both sides. If you're buying long or if you're shorting, you got to be careful. But that's OKLO. We also have CoreWeave this week. CRWV is the ticker symbol. Let's pull this up. CoreWeave is up today, 8%. So CoreWeave actually just IPO'd recently as well, right? So they're up, again, 8%. Company is reporting earnings, I believe, tomorrow. Yeah, tomorrow after the bell. And they're heating up. It's clear we're heating up into earnings. The stock's gone ballistic, guys. Another one that's gone crazy. It was at 33 bucks back in April, went all the way to almost 190. This thing went up 500%, 450. Saw a drawdown, and again, now we're heating up into earnings. And I actually like this setup out of all these stocks we've covered today. I probably like this setup the most. We're getting we got the drawdown already from 188 down to 106, big drawdown. Now momentum's building up. We're up like 30 bucks a share in the last 2-3 days. Stocks breaking out of these moving averages. That's the key. Primarily this 180 moving average. We're breaking out of it. And at this point, guys, yeah, this could be a runner, especially if they crush earnings, which I haven't looked too deep into the earnings. I have the estimates here, but I don't know kind of what they're guiding for, the company, kind of other things to expect. But overall, we're doing a brief glance in this video. But overall, man, if they crush, the setup on the charts looks pretty good. I don't know what you guys think, but that's kind of what I'm thinking. So CoreWeave, the EPS estimate is a loss of 20 cents on revenue of $1.08 billion, right? So loss of 20 cents, revenue of over $1 billion. And again, the stock's heating up. Watch it. CRWV there tomorrow after the bell. And Kava, which honestly, guys, I might go to Kava for lunch today. We'll see. But man, this company has been struggling. The stock, at least, has been struggling. I know the food's freaking good. That's why, again, I want to go there for lunch, maybe today. But Kava stock's down. It hit 153 back in December. Now we're at $85 a share. Demolished. You know what I mean? Destroyed. But it is starting to put potentially a bottom in here. You can notice, yeah, we've gotten killed this year, but a lot of the damage came in the first 3 months. In December as well. It started in December. We hit $153 in December, and then by the middle of March, we were at $76. So in 4 months, we cut in half, and since that point, we've been flat. So there could be something here. Not calling a bottom, not saying to buy it. I don't own any of these stocks for that matter, but I'm watching it, man. You know, Kava is a growing company. The product's great, which you don't base an investment based on the product being great or you liking it personally, rather. I mean, obviously you want to invest in a company that has a great product, but if you're looking at or if you're like, oh, I like this freaking burrito chain, oh, I'm just going to go buy the stock. It doesn't necessarily work like that, but it's a plus that you like the product. It's good quality. You like the food. And in this case, Kava, I like the food, right? But I'm just one person. I've heard of people that don't like the food, but it might be worth digging deeper into. The stock got really hot, very hot, you know, from $29 all the way to $170 in about a year or two. It's cooled off. We do have a bit of a head and shoulders here. You know, if their earnings are terrible, guys, this probably will play out. We might see more downside, but yeah, it's one worth looking deeper into, I think. Kava EPS estimate is at 13 cents versus 17 cents from last year, and the revenue estimate is $285 million versus $233.5 million from last year. That's up over 22% year over year. Not bad. Again, they're a growth company. Not bad. And honestly, I wouldn't mind if it dumped even more, because that would incline me even more to look into it and potentially, or look deeper into it. I've looked into it, but look deeper into it and maybe actually buy some. We'll see. That's Kava. And last but not least, guys, Cisco, CSCO, which this stock has been hot. I mean, this thing's trading near highs on this 4-hour time frame. You guys can see the all-time high was back in the dot-com bubble, which is nuts. Holy moly, it took a quarter of a century for this stock to get back to the all-time high, and it's not even there, actually. We're $10 off still. Insane for Cisco, but we'll see what their earnings are like. I think they're on Wednesday. Let me double check that for you guys. Yeah, Wednesday the 13th after the bell. And Cisco EPS is projected at 98 cents versus 87 cents from last year on revenue of $14.62 billion versus excuse me, guys, $13.64 billion from last year, up 7.2% year over year. Not bad. You know, not bad at all. But this is a, you know, great example of a stock, or it's a lesson, right? You look at this. This shows you when stocks are in clear bubbles, when they're running, when there's a mania out there, buying at the top or FOMOing and going all in on a stock at the top could be dangerous. Again, it's 25 years later, guys, and we're not even back to all-time highs yet. That's scary. But with that being said, I'm going to wrap up the video, guys. We're in here for a long time, almost 20 minutes, but there was a lot to cover. Let me know your thoughts in the comments, what you guys are doing this week. Hit the like button. Feel free to subscribe. Join the email stock newsletter, guys. Again, it's free. And check out my Patreon for my portfolio updates. I post updates every single week. That is linked down below. And with that being said, cheers. I'll catch you in the next video.